The United States of America is clamping down on their citizens who are suspected of evading taxes by hiding their income and assets in offshore accounts. Once a tax haven for foreigners, financial institutions in Belize are now being targeted to reveal information on accounts belonging to American nationals. An online article has indicated that the U.S. District Judge Ursula Ungaro of a federal court in Miami, Florida, granted the state's petition for permission to seek records of Belize Bank International Limited and Belize Bank Limited correspondent accounts at Bank of America and Citibank. That decision means that a special John Doe legal summonses was approved, which seeks to assess information on U.S. taxpayers who may have undeclared accounts at the Belize Bank International Limited or Belize Bank Limited. Through this court order, federal investigators are now authorized to research records of so-called correspondent accounts that the Belize Bank maintains at Bank of America and Citibank. The authorities believe that the information on those accounts from banks who conduct transactions in U.S. dollars whilst not having a presence in the United States will help the IRS find the taxpayers who have accounts at the Belize banking institutions. The article went on to say that there is another company, Belize Corporate Services, that provides so-called shelf corporations, paper companies that can be named as a perpetual owners of offshore accounts. All three entities are corporate subsidiaries of BCB Holdings Limited, according to the IRS declaration. That declaration described a federal revenue agent's review of information gathered from Americans who came forward under a voluntary IRS disclosure program and provided information about accounts they once held at the Belize banks. The court action marks federal investigators' latest use of the special summonses to compel account disclosures by offshore banks suspected of helping wealthy Americans' clients evade U.S. taxes. The IRS previously used the tactic to pursue account data from banks elsewhere around the world. The U.S. federal tax law requires American taxpayers to pay taxes on all income earned worldwide and to also report foreign financial accounts once the total value of the accounts exceeds $10,000 at any time during the calendar year. Knowingly withholding this information on a foreign account can result in a fine of up to 50% of the amount in the account at the time of the violation. Back in 2009, U.S. investigators also won court approval to serve John Doe summonses on Swiss banking giant UBS. UBS ultimately turned over information on an estimated 4,450 American clients. The bank, Switzerland's largest, also paid a $780 million fine under a deferred prosecution agreement after acknowledging it had helped clients duck U.S. taxes.